What's up, guys? Welcome back to the channel. My name is John and this is John Paul Investing. If you're new, thank you for tuning in. Today I'm going to talk about the beauty of dollar cost averaging. I think it is important to simply average into the markets as time progresses and not focus so much on trying to time the market exactly. The concept is that you find a certain dollar amount that you are able to afford depending on your lifestyle, your expenses. You find a certain dollar amount, whether it be $100 a week or $500 a week. You want to find an amount that you are able to invest consistently over a long period of time. And the idea here, guys, is that you just simply accumulate more into the business that you understand over a long period of time. I also wanted to share with you how you can get involved in startups without having to be an accredited investor making over $200,000 a year or having $1 million in net worth, thanks to something called crowdfunded angel investing. So before I got into the video, guys, please go ahead and hit that like and subscribe button. This way you are notified when I make videos just like this one, and it's a way for you to show your support for the channel. And don't forget your 2 free stocks using the WeBull link in the description. All you have to do is deposit $100 and you will get 2 free stocks, which you can sell and then do whatever you want with that money. It also is another way for you to support the channel, so I highly recommend you guys check out the other link. It essentially is risk-free money, guys. And lastly, guys, I did want to bring up Anchorhead Coffee Co. because they were nice enough to send me a variety of different coffees, as you can see in my background, in case you guys were wondering what those were. I've so far only tried Ethiopia Ambella, and so far I was very pleased with how it tastes, and it smells so good. I love coffee, so I could be ultra biased here, but I really like the packaging. They made sure that it's going to last a long time. They even include the day that they roasted it. This was roasted on February 23rd, and we are on March 5th. It smells like they roasted it yesterday. So a quick shout out to Anchorhead Coffee Co. Thank you guys so much for sending the coffee. Go ahead and check out Anchorhead Coffee in the description also. So we are looking at Nano Dimension on a daily time frame, meaning that each of these candlesticks represents a day in time. All the price tags that you see on the chart right now are essentially areas of support where I would have personally averaged in my my positions. Of course, these are not exact because these are all in hindsight, so it's really hard to gauge exactly. But for the sake of example, I want to show you the difference that dollar cost averaging makes as opposed to simply buying at one specific price. So the middle column shows the shares that we purchase, and then the right column is the cost for those shares at that specific price. I will not change the purchase prices. The only prices that will be on this chart are the ones labeled here or the ones that I just showed you on the chart. So if we were to make a purchase at support, every time it broke resistance and retested an area as support and we decided to average in a position, that is what this spreadsheet represents. So assuming that we got one share at each of these points of interest, this would give us a cost basis of around $9.38. So pretty much for the month of, January, February, you were pretty much positive the entire time. But as you know, the markets have been falling the last couple weeks. And right now you'd be negative maybe 10 or 15% in stock price. I think a little more than 15% actually. So if you would have just simply bought one share at each of these particular areas of support, you would only be down around 10 to 15% in Nano Dimension stock, which in hindsight is not that bad compared to the 60 or 70% drop that we've experienced over the past 2 weeks. So conceptually, guys, it's really simple. All you have to do is just secure some income in whatever your occupation is. You want to put some of that income to the side consistently on a weekly basis and add that into the markets over time. Now, if you do combine that with what I just showed you on the charts where you simply average in more at areas of support, this is where I think you can get an upper edge in terms of dollar cost averaging. Now, I will say that there is kind of a degree of luck when it comes to dollar cost averaging because let's say that you get paid on Fridays, and let's say that this particular Friday, today would have been an excellent day to average in heavier because markets just so happen to be red. But then let's say in a month from now, you get paid on Friday still, but this time the markets are up, 10, 20%, and then you buy it the following Monday, prices crash. And now the purchases that you made on Friday are all red. There's a chance that you can get unlucky like this, but that's the whole point of holding long-term in stocks that you understand and want to own for a long period of time. If you decide to take the route of day trading in stocks, you are essentially going to be sitting there looking at your watch, and then you're going to put a limit order to try and sell your position at a certain price. And then you're going to sit there and still stare at your charts even though you put the limit order just because you're scared that price might go up more than what you thought it would. So now you have two areas where you're just sitting there staring at your watch and your charts, trying to figure out an optimal area to get in and then get out. I'm not trying to bash day trading. I'm simply saying that it is very difficult to try and day trade and do it profitably. You are essentially testing your luck every single time. But that's enough of that. I wanted to share with you guys something that changed around 5 years ago that was not possible beforehand. As you guys may know, I've been reading a book called Angel by Jason Calacanis. This is a book about angel investing. Angel investing is simply investing into startups and small businesses that would not otherwise be available in the public markets. These are very risky businesses, but potentially pay out very big on the other side once they do go public or get bought out. But the main point I wanted to make is that in order to even get access to these deals, you had to be an accredited investor, meaning that you make at least $200,000 a year or you have a net worth of $1 million or more. In 2015, though, the SEC adopted rules to permit crowdfunding for angel investing. So thanks to the SEC, non-accredited investors now have access to some of these deals to angel invest. So I will state that this video is not sponsored, but the only two websites that I know of right now that are reputable and have a lot of trust built around them already is going to be republic.co and seedinvest.com. I will also mention that angel investing is very risky because once you invest in these businesses, you have to leave your money there for, multiple years, between 5 years and 10 years even. I think the normal time period is between 4 and 7 years, but expect your money to be locked away for a long period of time. So the reason it was so regulated to begin with in the first place is because of this reason. It is very risky. You don't have access to that capital, and there's a likelihood that you will lose 100% of that money. So it's essentially a safety net for investors to make sure that if you are an accredited investor, they essentially take away the safety net that they would usually give to other investors because they want to make sure the SEC is there to protect you and wants to make sure that you don't lose all of your money. Angel investing has been something that's been very interesting to me as of lately, and I have been looking at a few businesses that I think you guys might take interest to. These are all on Republic. I looked through a lot of these companies, and right now there's only about 4 or 5 that pique my interest as of now. So we have Kibbo, that is essentially doing like an Airbnb, but for van life and I guess nomadic living. Sentry Ai is a startup focused on making cameras smart. That way they're essentially like smart surveillance, so you can turn your cameras into things that would recognize faces and particular cars, license plates, things of that nature. Salon Monet is a company that focuses on making nude shoes in all colors. The founder says that, the nude is not just one color, it's essentially a nude color for all types of skin complexions. So she's essentially trying to capitalize on that particular market. She says she has backing from, Beyonce, Gabrielle Union, Halle Berry. Again, I'm not sponsored. I'm simply, presenting some companies that I think look interesting. Realty Feed is a virtual collaboration software for real estate agents. So essentially you can communicate in a kind of social network environment, but specifically for realtors. Now, I don't know exactly how this will do because we already have things like Facebook, but essentially this is going to play more towards real estate, and they're going to have some kind of AI that's going to match you with properties based on location, your relationships, things like that. I'm sure it'll be robust, but I don't know enough yet to, put my money in there. And then we have Relay On Demand, which is essentially a trucking workforce business. So what they do is they have pre-screened drivers in a database that essentially just look for work. So if you're a small trucking company and you are cycling through drivers and you're having to pre-screen them all the time, it's very time consuming. So essentially the value they're creating is trying to make it to where you always have pre-screened drivers for all kinds of particular loads that need to be delivered. Their value proposition is they want to essentially try and guarantee that you always have a driver ready for whatever job you need to complete or load to deliver. And for Kibbo, I was doing some basic research. I was trying to look at trends for Kibbo. The same way you would analyze stocks in the public markets, you should analyze startups in a similar light. Of course, it's not going to be the exact same because some of these companies might be pre-revenue, and in that case, I really wouldn't even go anywhere near them. I have not invested in any of these startups yet, but I see myself investing in some of these startups very soon. I will keep you guys posted. You should always be trying to learn something new, so I hope this is a refresher to you guys. That way you're not thinking, primarily on just stocks and prices right now. Like, you need to look at the broader sense of investing and try to learn as much as you can. Now, don't forget, guys, that I do have a Patreon group where you can get real-time trade alerts and access to our private Discord community of over 150 members, and it's a great place to learn if you are a new investor or if you're an investor trying to learn new things. But anyways, guys, that is it for this video. If you liked what you're watching, please go ahead and hit that like button. And while you're down there, go ahead and hit that big red subscribe button. And don't forget to hit the bell notification to get notified when I make videos just like this one. Thank you guys so much for watching, and I will see you in the next video.